Hey guys, welcome back. Hope you had a good Tuesday in the market. GME had quite a sell-off today. Sorry I wasn't around yesterday. I am still sick, but I'm not voiced today. Sub up, like up, comment down. Happy money sticks around. Here's our Twitter on Twitter. You can follow us on @HappyMoneyYT, and we have a Discord server link for that's in the description. Welcome to jump on there. It's free. So I put a post on YouTube if you guys saw it, basically with what I was thinking for this week, and it was under, I don't know if those don't come out for notifications, so maybe y'all didn't see it, but basically yesterday's daily candle, of course we opened up and broke that rejection of 40, which is great, and had good increasing volume and really rallied crazy. And then it was already coming up here and kind of hitting this resistance, this 47, 48, these candle bodies from back here in March. So it's fine that it hit that resistance. That tends to happen. Yesterday was the RSI was too hot. It was running too hot to really break through it with the amount of volume it had. There was good volume, but just so. With how it consolidated yesterday and stayed consolidating high, that was pretty bullish. Today, with how far it came down, I'm not as bullish. So basically, I was anticipating to stay bullish. I'd want it to consolidate higher than where it did, probably like that 42, kind of just the top of that range. Let me show you. I'd want it to kind of consolidate above the body at 41.5 today. This is where I would want it to consolidate, to think that we have another move this week. Not to say it's not coming, but yeah, with it dropping down this low, with the volume getting shut off, borrow fee did drop some. I'm thinking that this rejection of that 48 was probably a hard rejection, and now they're setting it back down basically. On the hourly here, we've now built kind of a head and shoulders. On the 4 hour, I really looked at the 4 hour, sort of the same deal. Daily, I mean, the moving averages, we're still good. We're still above the 9. Our MACD, of course, is still green. So we'll just see. I'm not thinking at this point. It's probably likely that we will be breaking that resistance or even retesting that tomorrow, or possibly at all this week. We might not have another run until maybe end of the month, SLD, after OPEX on the 19th. So yeah, we'll just see how high it holds up and what supports it's holding up on. So right now it's kind of holding those candle bodies at 40 range. I kind of presume it will come down further and maybe this 37 area as a support before we kind of find a ground or go up, or it could even come down further to 32. What wouldn't be good, I think it's maybe fine if it comes below 32. I wouldn't think that's the end of the world. I think if it drops below kind of this 28 area, then the longer term trend will be kind of squashed from the upside, I would think, because that would break us out of the bull flag to the downside. So we kind of broke out to the upside and had a big fight for a test. Look on this weekly candle, but I think it'll probably come back down and settle for a bit before hopefully another move, and on the next test it will bust through it. But at this point, yeah, weekly is still very bullish, of course. Bullish MACD. Yet last week's volume was increasing than the week before. Looks like this week we'll also have more volume, so that's all good. But today I had, even though yesterday kind of it looked like it rejected that, and it did, and this candlestick is a little bearish just with that big of a wick up there. I was thinking today we hopefully had more price action just from options expiring on Friday over 40. So that was here. So I don't know if they fulfilled some of those yesterday or if it's possible that they fulfill them in after hours or pre-market before tomorrow. So if we get a big bump, maybe in pre-market, we'll see. Or if they are just pushing that down the road and king taking it basically and using some other tool to push those obligations off or those exercise. I'm not sure, but at any rate, last week we had this same sort of interesting price action where Friday was green, right here, and then Monday was green, where typically they sell it off on Friday, right, and sell it off on Monday, and then Tuesday was kind of a consolidation day. It was a red candle, but it was higher. Then Wednesday and Thursday were the big days. So we could see a turnaround before the end of the week, just because today's move to the downside is quite low volume. So it's not a down move like a good example is let's see, way back here. Like this is a great example. So they had this long move up for like 2 weeks, and then this huge move down on big volume. So kind of signifying, okay, it's fully rejected. We're changing directions now. The down move we're seeing right now is on low volume, so it might not be a big move. I'm still thinking we could be in a pattern like this, where yesterday was basically this day, and we kind of have a down move for a week or so, and then see a floor found, and then a spike at the end of the month. So see how this day, like all these days, the volume was kind of decreasing on the downward slope, which is bullish basically, where if it's not increasing volume as it's going down, that's good. So yeah, gonna just keep a close eye on the volume. Whereas here, big up moves on the rejection day, volume was actually high, and then it stayed pretty high, the volume. And then as it started to come down, it just, it already basically switched all that volume of selling, and then it just melted down on low volume. So right now we're kind of on this low volume reversal. Tomorrow I would expect probably less volume and a lower price action, basically lower close, and on, and then see where floor is found, and then we rally. Tomorrow is also CPlie in the morning. Not sure how much that'll affect it. BBBY had an astronomical run. Our leaps were up pretty good. I mean, they don't get huge exposure, I guess, like 140% or something. Maybe, I don't know, 300% at one point. I'm not planning on selling them. I'm just probably going to hold those, and I'll get more exposure on BBBY. I should have at 4, but GME's got a lot of my capital, so basically. But yeah, I was actually thinking about even getting shares once it comes back down a little bit more, see where it settles. Maybe the 7.5 range, 7.25. Just following Ryan Cohen. I don't believe in the fundamentals a whole lot. I do see there's potential with the bye baby. Other than that, I think it's probably a dying business. But Ryan Cohen, I mean, that's there's potential there, and Ryan Cohen wouldn't just throw away all that money. So for none other than those reasons, I think it could be a good long-term hold, long-term pickups. That'd be just shares, and then of course like leaps and that sort of thing. So I'll let it cool down. A lot of this was just hype momentum from Wall Street bets. Looks like it really got shut down today though. So SPY, yeah, it's hard to know which one's higher. Like this one shows higher on the daily than that one. Let's see if I go to hourly. It's like so close. So yeah, this on the hourly shows a little bit higher. So it looks like it just barely broke through. But that being said, it didn't. This price action didn't get higher than this as much as this RSI did. Basically, this RSI peak is way lower than this one. That's a bit of a divergence there, and we gotta just wait on CPlie though, basically. But this whole choppy section up here looks very similar to this. I think if it's bad, I think we could see a pretty good market crash in the end of the bear market rally. But we nailed this bear market rally. We were calling it back here weeks ago, a whole month ago. Yeah, right here I saw this divergence, and I'm like, we're gonna have the biggest, longest bear market rally, and so far it's been true. This has been the highest percentage bear market rally we've seen all year, and it's lasted the longest. So I maybe didn't capitalize on it very well, but the fact that I could see it and kind of position for it in a way, I'm pretty stoked on. I guess I made all right on the Tesla rip from it, and GameStop too. I can show you guys GameStop plays what we did. I repositioned quite a bit today. Sometimes just playing it stupid simple is the way to go, and not trying to overthink it. And that's oftentimes the way to do it. There's a reason why sometimes beginners just do really well in the stock market initially, because they just play stupid simple. They don't know what they're doing, and yeah, so kind of just thinking that along those lines at times is helpful. So yeah, the shares in here are those swing trading. Close those out today on Webull, and I don't know what we realized on that little run on these. I think I had like 400 shares in here, so I don't know, a few grand, whatever it is, I'm not sure. And then on our E-Trade, Fidelity, actually, yeah, our Fidelity count, I think it was up to like 120k at one point, 125 when GME was closer to 50. I'm not like trying to time peaks. I'm fine to just capture the momentum. So I bought into the swing trading shares this day, and I put up video on YouTube and said I invested 100k into GME, and it was this day right here. I can't remember all the reasons why I chose this day, but I'm sure I say in that video. So I didn't catch the bottom, and on the top I didn't catch the top, so I'm fine with this move from 33 to whatever that is. I don't know how many percent, but something like that, about 20%. So yeah, we made I guess 100. Yeah, I don't know what we did on it. I think probably like 25-30k again on this rally, just like this one right back here. Yeah. So Fidelity, let's see. Yeah, Fidelity ones, close those margin shares, and we'll just be sitting on that for now. Probably do cash secured puts again, open those back up. However, I want to wait a little bit because I think we might still have a couple big. I don't want to start them too early. It's all about being patient with your opening and closing, and I even did it. I even did it myself, where I closed a position, then I reopened another position going the other way. And sometimes it's too close, or I close a position and then I wait just a little bit to get back into it to go back long. And it's like, no, you just gotta really wait for it to shake out. Kind of getting back in too quick is a bad thing. So yeah, we're up, including the IRA. It's over 100 because I sold the IRA also. It's nice there's no wash sales on those. And then on E-Trade, of course, we still have these on marinating. And then on this one, got rid of these. So this account, yeah, I think this account did pretty well. I didn't sell my Leap, which is fine. I may end up just exercising that. We'll see where GME's at that point. Yeah, so those, and then E-Trade. Did a lot of trading, of course, yesterday. I was scalping in and out. Too much, actually. It was better if I just wasn't even around yesterday, because again, I was like popping back in to try and get another move up, and I didn't wait. I wasn't waiting long enough because I saw the RSI was hot and I knew it needed to cool down. So I had some patience, but then not enough. Anyways, yeah, let's see. So this is actually yesterday's. I won't go over this. I actually took a lot of profits on other call plays we had, Express, and I opened up some bearish plays for the CPlie tomorrow. I figured actually today would be more red. I opened up puts on FNV, puts on BPT. These actually aren't very good puts, all these. They probably won't move with the market, but I just want to put exposure and found some TA I liked. Puts on Pinduoduo, which is PDD, and then close some of my longs, basically. And then today, here's what I closed. And then I closed my BlackBerry call debit spread. I closed some of my actually AMC puts. Probably too far out of the money. Closed my Leah call. I cut losses on that one. And then GME, I opened up a 91 call credit spreads for next Friday, 40 and 40 and a half. So Nice about these, if you open them close to the money, it's basically it's 100% return if it works in your favor. And I've done well with credit spreads. I need to do them more. It's kind of annoying now though, just with this many contracts. But yeah, anyway, so if you're close to the money, I can't quite get it, but because GME kind of sucks like that. But at times you can get close to the money, basically at the money with the credit spread, and maybe with put credit spreads, it's actually more likely to get that. But you can basically get double on your money. So if you're investing 1,000, you'll get 1,000 return, max profit, if it stays below that price or above that price, depending on which way you're going. So this, I just basically need it below 40 by expiration, and it won't double their money, but it's like a 75%, I guess, winner. So that's my one downside play on GME. And yeah, I still, let's see, okay, so I still have this put. I did sell some of the GME puts today, just because these are Friday, and I don't know. I probably could get back into these, but we'll see. Honestly, if CPlie tomorrow may cause the market to rally, and it might cause a one-day rally before a dump, or it might cause a dump before a rally. Sometimes the first reaction's wrong, but depending on what the number comes in, I'm thinking it's not going to meet expectations of 8.9% or 8.8, whatever it is. I think it's going to be higher than that. So how much higher I think will matter. If it's higher than the previous report, I think the previous one was 9.1. I think that'll be pretty bearish on the market. I think initially the market could rally. Well, it's hard to know though, because there's the side where, okay, that's going to actually make it rally, because that means Powell is going to quit raising rates. Well, no, see, it's probably going to be bearish. I go back and forth on it. So I think if it's higher than the previous report, it's got to be bearish, basically over 9.1. If it's lower but not as low as expectations, that could mean market rally. If it's at expectations, that I think could mean market rally. Unless it's priced in, then it could just be a little market rally before more downside. If it's between previous one of 9.1 and the expectations of 8.8, I think that could also mean could be a bit of a market rally too. So basically, I'm totally unsure. But neither is the same as the market. That's why it's been chopping for like a week. It's just waiting for that data. So that's what we'll have to wait and see. Plays here. So here are the PBYs. I guess they're up 224%. So I think yesterday they were up like 300 some percent. Datadog longs were working well. NYCB were working well. Today kind of crushed some of those. So these are basically, I still have plays if it's bullish, basically, if the market wants to rally on it. Because the market could have a huge rally. The bear market rally could really just be getting going, honestly. But I did open up some puts, these puts, and I'd like to maybe get some Tesla exposure to the downside, but I've got enough out there. I'm fine to just kind of collect and build up a little more cash. Yeah, that's what I got for you guys. Thanks for watching. We'll see you on Discord. Peace out.